Welcome back to Cignals Trading Academy. This is our ninth lesson, and today we're going to discuss value trading. And I get asked a lot of questions about trade locations. How do you use signals to identify a trade setup? What are your entries and exits and all that type of good stuff. And what most people don't seem to fully grasp yet is the idea of trading value and not price. Looking for areas of acceptance and rejection and trading between them. That's the natural rhythm of any market, guys. Liquidity starts and stops all moves, and the liquidity gravitates between acceptance and rejection. And that's basic auction theory. And when you know that and you start being able to identify, balance days, trend days, where acceptance is, where rejection is, who has control of the initiative, it gets a little bit easier to trade and find setups based on value and not price. So that's very important. That's one of the biggest keys that I could ever try to give to anybody in this type of trading environment is trading value and not price. That's something you should really write down. We got to learn to trade value and not price. Okay, I don't really care if price gets to X level. Okay, doesn't necessarily mean it's a screaming buy or sell. It really depends on where value is for that given time price opportunity. So again, markets like to that market symmetry works in the sense that liquidity and therefore price gravitates between what's called acceptance and rejection. So let's just explain that real quick. We've gone over this a little bit, but when you look at the profile, we see areas like this right here in this triangle. We see areas like this in this triangle, and then we get the rest, which is kind of in the middle, right? So the middle piece right here is defined by high volume nodes, or HVN, right? These are our areas of acceptance. Everything in this shaded area, okay, that's not in the triangles, is where 70% of all accepted prices and trading occurs, okay? So we need to know that these are our areas of the most commonly accepted. Well, POC is our most commonly accepted price, but all of these prices, these HVNs, are our most commonly accepted prices and perceived as value, fair prices. This is where retail trades, guys, in the 70% band. You do not want to be trading with the masses in this 70% band, okay? This is why would you, if you were in business, let's just put it into a simple type of analogy where if you were in business, right? Let's say you owned a deli or, like a bodega. In New York, we call them bodegas. If you owned something like that, a corner store, and you sold a bottle of water for $1, right? You wouldn't want to be buying that bottle of water from your wholesaler for $1, right? Because you wouldn't be making any money. You'd actually be losing money because you would have to pay taxes on the dollar you collected back from that person, repurchasing that same bottle that you paid $1 for $1. So you're actually losing money. I'm not saying it's one to one, obviously, but that's the thought process here is that if we're trading where retail trades, we have no edge because retail is, for all intents and purposes, is the dumb money. And you don't want to be following dumb money. So what we like to do and what we recommend most people do when they trade using signals is that they trade in these triangles or our low volume nodes, right? These are areas of rejection. Ooh, that's a terrible arrow. But you get the drift. That's a terrible arrow. But same goes for up here, right? LVNs. Areas of rejection. High volume nodes, areas of acceptance. 70% of trading happens in the shaded area, okay? These are your most commonly accepted prices, which is why we call these areas of acceptance. Then you have the unshaded areas, which are your areas of rejection, otherwise known as low volume nodes, and that is where we want to be entering into trades, guys. This is very, very simple stuff, okay? It's not rocket science. I don't like to overcomplicate this stuff because it just breeds the environment for errors and for overcomplication of what should be very simple. And nothing could make this more obvious than what I'm about to show you. Now, if you notice, profile low, profile high. So up here, we've gone over this before. You guys should be almost pretty much professional at this point. Profile low, profile high. Okay, this right here traded into the profile low and the low volume nodes. Okay, this little downtick we got here, right? Now, notice how we get to the profile low, we extend a little bit, and then we start to revert higher. We get this cluster come in again outside of value, but at a low volume node area of rejection. Okay, and we start to grind higher. Now notice we start to get some absorption back down. Once we start to top out a little bit here, notice how we start to get absorption in this area. Okay, people are taking profits into the high volume, okay, or into the accepted areas of the profile. That's the natural rhythm of markets, guys. Rejection gets bought and sold into accepted prices. You don't want to be buying where everybody else is buying, or you are not really gaining an edge on retail, right? You want to be buying when most people are afraid. You want to be selling when most people are giddy, right? So this is exact setup. You saw how we dipped, okay, into the lower area of the profile here, LVN, profile low, value area lows. And we start to rotate higher off that VWAP cross, back higher. And now look, guys, we get this expansion bar higher, and we start to consolidate in this range for the most part. We broke through it, cracked this UFA, topped out locally for the most part at about 42K. But if you notice now, let's go back to here. The same works in reverse, okay? We get to profile highs. We get to what's known resistance, right? We get through the UFA, and we start to crack higher, okay, and test the upper end of the range, which is a swing pivot at 42K. That's capping us. It happened to be our profile high and an LVN cluster, which we can see right here. So what happens? We start to get sellers come in, which we see right here, which we see right here, okay? And they start to move us back into accepted high volume, okay? This is as simple as it gets, okay? Time plus price equals high volume, which is acceptance. Okay, so the more time you're trading at any one given time price opportunity or area of the profile, you're going to wind up with high volume or accepted prices. Okay, this is just basic auction theory and volume profile, right? Because what happens is the more we trade, as you can see here in this area, what do we get? We get this. We get all of this, right? So the longer we stay at any one area of the profile or of our trading range, if you will, we start to get more price action at these levels, which is, shown on the charts as consolidation or whatever, trading back and forth in a range, and we get high volume nodes or acceptance. The majority of people feel comfortable trading at these levels, agree that these are fair prices, fair value, whatever you want to call it. So that's why we get this whole setup, right? We get people that agree on, and this is mostly retail. Most institutional and professional traders are not trading in the middle of the profile. They're not trading in the HVN areas because there's no value to them. We always want to be entering into areas of the profile that are considered rejected, okay, because there is actual value there, okay? And what happens is we see it time and time again, okay? We see it time and time again. People play the edges of the profile. They fade the extremes. So if price is getting, listen, and this comes down to, we're going to get into this, going forward, but it comes down to knowing your trend days and your inside days and basically where your extreme points are. Okay, so this, for the most part, going back to yesterday, a little bit before, maybe like Easter Sunday when futures opened back up, the night of Easter Sunday, Eastern Standard Time, when futures opened back up at 6 Eastern Standard, we got this little dump, right? And then what happened? We hit basically the lowest parts of the profile, extended a little bit, and selling dried up. Buyers stepped back in, and we got that shift in the thought process of where the market was going to go. So people stopped. We got a lot of people stopping their selling activity around the lows of the profile, and then from there we got a bunch of buyers step in because we were trading outside of perceived value in areas of rejection, and then the big boys stepped in and brought us all the way up to UFA for the most part. We kind of stalled here. People were taking profits again in this area, which is to be expected. It's obvious that big traders move the market higher, meaningfully higher, outside of the rejection areas of the profile, into areas of the profile that were more commonly accepted, and let retail kind of do what they needed to do in that area, which is why we have our POC around 40 and a half. And then we started to grind higher today. Okay, we took out this UFA resistance, we cleared it, we got to the top of the profile, and again, outside of value, right? We're kind of topped out for the most part, outside, slightly outside of value at the profile highs. We have a lot of 42K defenders stepping back in, defending the pivot, and again, what happens? We got pushed back into value. It's very simple. You're always gonna want to be fading the extremes, okay? Whether that's, buying under the value area and swinging back into value and taking profit, or shorting or selling above the value area and taking profit back into the more high volume areas. You're always wanting to take low volume entries and high volume exits. That's as simple as it will ever get, guys. Okay? And taking that one step further, guys, on balanced days, or days where we have some kind of symmetry like we do here, this is a 4-hour profile that's showing you basically the profile for all of this trading activity. Feel free to ratchet this down time frames if you want. If you're on our subscriber list and you're paying for Cignals, you have access to all different types of time frames, so you'll be able to scalp or mini swing a little bit easier, as opposed to what we're doing here based on a 4-hour profile just for educational purposes. So with that being said, on something like this where we have some type of symmetry and balance, we would just fade the extremes, right? We'd fade the extremes. We'd short up here theoretically, back into value, and we'd buy the low volume or rejection down here and just play this whole rotation from here back up, and then from here back down into the high volume areas or accepted areas. On days where we get imbalance, not so much of this type of symmetry, an imbalance or a bullish or bearish trend day, we would want to be basically we get a lot more rotation of acceptance, meaning that we're not going to just have this buildup of accepted prices in one area of the profile. You'll keep seeing high, like essentially price moving sort of like this. Let's get rid of all this. Basically, price moving sort of like this or this, and it's just going to continue that way. And we're going to get areas where, like, let's say here will be an accepted area, and then we get a push higher, and we get more high volume up here. You're going to want to basically, if this was the case, right, and we're talking about a day where we're getting a bullish trend day and imbalance on our profile, and we're getting these value shifts all over the place, and we're going to get more into value rotation and explaining like how that works in the next video before we end the freshman year of Cignals Trading Academy. But for all intents and purposes, just to front run that a little bit, if we see a trend day where we're getting that push higher, new values established up here, big volume, let's say high volume nodes, and then right down here we see these low volume nodes. Every time we pull back into that area, we're going to want to be buying that for the push higher again, right? And the same works in reverse if we're dipping real hard, right? We're going to get, let's say, high volume shifting from here down to here, and then we get high volume here, and you're going to want to short the low volume pullbacks, the rallies back. Okay, so it's very simple. It's not complicated at all. That's the long and short of it for the most part, guys. You're always going to want to be buying low volume or areas of rejection or shorting them, into acceptance. And we never want to forget that rule because that's the cardinal rule of value trading. We're looking for areas that give us an edge, guys. We don't want to be trading with retail. We want to basically use retail as our liquidity, our exit liquidity. And the only way to do that is by having an edge on them, trading areas that they're unwilling to trade because by the time they become accepted prices, we've already moved on to our next setup. So that's really all it comes down to, guys. Realistically, as long as you remember these simple basic rules and understand the difference between trend days and balanced days and how to play the low volume areas, the areas of rejection, into higher volume or acceptance, then we're all Gucci and nothing is going to stop us. That's not to say that you'll never be wrong, okay? But you'll have a higher probability of success doing it this way as opposed to when you look for value entries and not price entries, you increase your odds, guys, so much in terms of your win rate or your potential win rate. So if you thought this was a useful video, please give us a thumbs up, a like, subscribe if you haven't already. Share this video with somebody you know that's on their auction theory, volume profile, order flow journey, if you will. This way they can get some knowledge that they might not otherwise have access to or know where to find the type of info we're sharing. And if you haven't already subscribed, turn on alerts, please do so, guys. It helps us a lot, gives us the motivation and the fuel to keep this stuff going and provide these lessons to you for free, and also obviously answer any questions that you may have in the comments or in our Discord. All the links will be below. Yeah, I mean, this is about as simple as it gets, guys. We're starting to wrap up the freshman year. There'll be another 1 or 2 videos coming after this. Again, value rotations will be next most likely, which will build off of what we just did. And then from there, we'll wrap up with something special and start our sophomore year. So again, if you haven't subscribed already, what are you waiting for? Subscribe, turn on alerts, please. It helps us. Like, it really, really helps us because we're trying to put out a lot of content, and the more subscribers we have, the more likes we get on these videos, the more you help us, the more we can help you. You know what I mean? Because we're doing this for free after all. And if you haven't signed up for Cignals, the entire suite of what we offer, the basic plan is $19 a month, guys. I mean, if you build it yearly, we only charge about $190 a year. That's less than 1 ETH transaction fee. I mean, you'd be crazy to not give it a shot for at least a month. So, like this video, subscribe, turn on alerts, share if you can with somebody, and make sure you subscribe to Cignals. Give yourself a fighting chance, man. Go ahead, try it out for a month. You won't be disappointed. I love you guys. Thank you for helping us build this community. I hope you find value in these videos, and I hope you have a great day.